Okay, so all in all in the day, going to be up $10,580 before commission. After commission, it's $10,200, and then with some shares that I purchased throughout the day, that's really going to probably bring it down to like $9,800. So overall, close to a $10,000 trading day. Could have been worse, could have been a lot better, and I'll explain that here in just a second. So tickers we traded today: NEO, $454. SNOW was actually a swing trade from yesterday that I added into today that didn't end up panning out. Took it off for a loss of 330. Traded EQOS for 144. Traded the stock SURF pre-market for 108. Traded VVOS pre-market and throughout the day for 2,900. Traded Rite Aid, RAD for 111. Traded CNSP for 545. Traded CLIR for 176, lost $34 on TRIT, won $1,148 on MVIS, won $572 on KODK, and won $4,784 on ELOX. And honestly, if I would have done my job really good today, ELOX I probably would have made $18,000 to $20,000 on. But it was a lot of risk, and so I just made sure to take it off rather than catching the full fading move. So let's get into the recap. First thing we'll do is start here with the biggest one of $4,784 on ELOX. I started shorting here a couple thousand, started shorting more a couple thousand. By the time we got up to 677, I was short like 18,000 shares, and my average price was 604. So as soon as we dropped below 604 here, I pretty much covered majority of that position, just left a couple thousand shares on. That way I could lock the win on, I could deleverage a lot of that risk. If I would have held it, maybe 36,000, who knows? But it was a lot of risk. I timed it a little wrong, and that's why I took it off a little sooner. If I would have timed this move 100% accurate with 18,000 shares and had my average somewhere at 625, higher as 640, then I would have been able to fade 18,000 shares a little bit easier than, being a little bit, on edge with it, a little emotional, I guess, if you may. So what was the reason for going short on this particular stock here today? So first and foremost, let me get my drawing tools. Okay, come on. There we go. All right, so what was the reason for going short on EOLS? So the first thing is, if you check the news, there was no news on ELOX. So the stock is essentially squeezing up, running straight up on the day with no news. A lot of times that move will not be sustainable if in the event it's running on no news. So we kind of knew to eventually be bearish on ELOX, and eventually it would probably drop out. So why did we start shorting here around 618s and then all the way up into 677? And why was I comfortable shorting all the way up to 18,000 shares in those prices? First, we got to go to your daily chart, and I'm actually going to open this up into two charts and just leave the daily chart open at all times here. So the reason we started shorting number one around 590 to 6 was that was the long-term daily chart trending resistance. So if I mark it, ready, I'm going to mark the right screen and the line will show up on the left screen. So ready, click. So we started shorting here because we were at the long-term daily chart resistance. So I went in pretty heavy size thinking we would reject the long-term trend. In fact, we squeezed up, so I had to short a little higher than I originally thought, and that's why my average was around 604. And if I would have waited, did a little better job, and I did a few market orders, my average would have been higher and the trade would have been better. But anyways, we were running into long-term trending resistance at 594. We squeezed above that, and I had a strong feeling we would not break the 677 because if I look at our weekly chart, and I don't usually go to a weekly chart, only time I have to go to a weekly chart is when our long-term 365-day chart isn't properly working, right? Or things aren't matching up entirely perfect. So we knew that the likelihood that we were going to break through the price of 680 was pretty low because that was a 3-year weekly trending resistance. So there was a lot of resistance lining up in this price of 6 to 677, and that's kind of how we knew to actively be sellers and bearish in this location, and that we would probably fade out because there's no news on the day. So this ticker resulted in $4,786. Basically shorting into resistance. All right. Next one on the list is SURF. SURF was a really low volume stock pre-market, but pretty much when it shot up here, I took a 400 share short and then just covered it when it went low. So early this morning pre-market, squeezed up out of nowhere. It was like So I went short without actually recognizing it was really, really low volume. So I got into a trade that was low volume and I didn't really want to hold it because it was low volume. So I ended up taking it off as we dropped out a little bit and the spread worked in my favor and I was able to get out for a $108 win. VVOS will be the next ticker we cover. VVOS. All right, so VVOS or what is it? VVOS. There it is. So VVOS had a couple trades, both short trades. So early in the morning pre-market, we squeezed up to this price. At the time, that was resistance. So basically went short 5,000 shares, all on the tops of these candles. Covered 3,000 in this dip here, and then I held 2,000 shares to catch the fade. Covered more into this drop, and then my last cover was going to be down there on these candles. So essentially short 5,000 shares, covered some, and then covered into this last drop here, and then took my position off. And then in the day, we squeezed up to here. I took a short of like 500 shares here. It squeezed all the way up to here. As it came down, I added more short, and then I covered into the low here, which resulted in another win. So all in all, made 2,900 on VVOS. And the reasons for shorting that one is, again, if we look at the long-term, I think it's, long-term daily chart, or maybe it was a 4-hour. I mean, either way, you were overbought. You were over the blue line. It was overbought pre-market. It was overbought throughout the day, and it was just running into resistance. So we essentially sold the stock. All right. Next one on the list is RAD, which was just a small long trade. So this morning, RAD got smoked, and then we pretty much just traded a little bounce right here. So we traded long this bounce, then we traded long that bounce, and I was taking small shares at that point. So that's why the P&L was only about $111 green on that. I wasn't sizing up too big on this position. But at the time, this trade, when we fell down all the way here, this line that you see, this diagonal line, was actually right here. So it looked like there was a trend line. I'll put it on for you. So at the time, the trend line was like that. So there was intraday trending support here. So we knew to get long here on the bottom after the sell-off, we would probably reverse that move a little bit. All right. Next one on the list is CNSP. So CNSP was a short this morning. Pretty much stock squeezed all the way up to here. I think I went short like 1,500 shares and caught this drop, covered most, and then as it dropped out a little bit more, covered most. So essentially, what was the reason for shorting CNSP this morning? When it squeezed up, got way overbought on the pre-market chart, and then the long-term daily chart was overbought. And if you look at the daily chart, you can see this price of 416. We knew that the price could go to 416, but that was going to be a strong resistance point. So when we started shorting 1,500 shares here, we were okay with it going all the way up there while being in short 1,500 shares, and then we would have averaged up more and shorted more on this price point, but it ended up fading out, so we just left 1,500 shares for the short there, which netted 545. Next trade on CLIR. CLIR was a short. So I caught CLIR. It squeezed up today. If you look at the right chart, look what it did. You see how it squeezed up right to this level. So at the time when it was popping, it was running right into that resistance of like 365 or something. So we knew there was a good chance it wouldn't break here. So it squeezed up. Didn't get the fill around 360, ended up getting a fill somewhere in the middle of these candles, had to wait till it dropped out here, and then I took the trade off. It wasn't a big size trade because I was a little late to the move, so I knew I was kind of chasing the move down a little bit, so I couldn't leverage up too high in case it squeezed up, the risk would be too elevated, so I just left like a 1,400 share short, and it ended up netting about $176. All right, next trade is red, $34. This was on TRIT. So essentially TRIT was a stock that got crushed this morning pre-market. We thought it could bounce. You see this little blue dotted line here. That is, at the time, that was the blue line on the bottom. So we essentially got crushed on the day all the way down to a long-term support level, which we thought it would be a support level. It turned into not being a support level. So it went long a couple thousand shares on this first candle as we were on this blue line, which at the time was support. We squeezed up, couldn't sustain the move, started to drop back out, so we cut the loss, took a trade of minus $34. Okay, next one on the list is MVIS. MVIS was also a short. So could have done better on this play, but I was in a short with this one. At the time, ELOX was moving, so I really wanted to actually be short on ELOX, so then I ended up covering my short on MVIS, which I could have got more money on. But there was also a really good play on ELOX that I knew would probably move faster, create more profit. So I ended up just kind of jumping from MVIS over to ELOX and accepting whatever money I'd already made. So there was a couple trades here with MVIS. The first short was right here. So first short on the day was right here. I had to buy 5,000 shares of short. So I bought 5,000 shares of short, costing me like $165 or something. So I caught this little pullback drop that allowed me to make about $275, cover the cost of buying shares to short. And then as we went up to these prices, I ended up buying another 5,000 shares of short, which costed $165. So I had a total of about $320 spent in commission to be actively bearish on the stock. And then I started reshorting in the 5s, and then I covered into this big drop. So overall, we ended up netting $1,148 from MVIS. So altogether, probably made closer to like $700 or something by trading this, because I had to purchase shares of short, or else I wouldn't have been able to actively short. So what was the reason for shorting MVIS at the prices we shorted at? Well, to put it simply, if you look at the chart on the right, you can see this blue line's all the way up at $5. So we knew that as the price of MVIS ran into $5, there was going to be a low risk selling opportunity. That's why we went short 10,000 shares and then covered into this drop. And the reason I covered that drop, because at the time ELOX was running and I had to pretty much kind of rush over there to start finalizing a trade for ELOX. Okay. Next one on the list is KODK, which was also a short. All right, so which I did okay with. I caught it a little late, and I kind of chased it down, but you know I knew the probabilities of the move, so I was late to the move. I wasn't really chasing the move. I was okay with shorting where I was shorting. If I had noticed KODK when it was running all the way to 1030, we would have been hammering short right at 1030 and up into 1030 and then covering this drop. Well, I caught KODK, my attention caught it a little late, so I ended up shorting 5,000 shares all on top of this green candle and into this red candle, and it essentially covered down here. So we shorted KODK on this red candle and then brought it down to this green candle, covered for a win of 540. I think it costed me like $150 to get shares of short, and so really only made like 400 or $350. But what was the reason for shorting this stock? All right, so if we go and look at the right side of this screen, we're in the wrong time frame. We have to go to the 4-hour chart. If we go to 180-day 4-hour chart, you're going to see that when we put a resistance line right over this trending horizontal line right here, or it's actually diagonal, but ready? Watch what happens. Put a line there. Boom. Where does it exist? Right there. So essentially, KODK on the day got way overbought into overextended prices, right into long-term trending resistance. So that's why I said I would like to have been short or noticed it or had my attention on it when it was at 10, because then I would have crushed it. Caught it a little late, but knew we would still probably fade the move a little bit, and that's why I took on the risk where I did, because I felt we would still get some sort of decrease in the price action there. Okay. That's KODK. And then the last one, I thought I might have missed NEO. Yeah, okay. So, I missed a couple on the top. So we already went over ELOX. Let's take a look at NEO. So NEO was a long move today. All right, so we traded the bounce long on NEO. So what we did was 2 bounce trades. We traded this bounce from the bottom of this candle up to the high of this candle and sold, and then we bought the bottom of this move and then traded it all the way up to there. So there was 2 trades, long the bottom of this candle, sold the top of the move before the red candle, long the bottom of this move, and then sold into the 9 moving average. And those were the only 2 bounces we did on NEO, which netted a total of $454. What were the reasons for going long NEO? Essentially, it was a really aggressive down selling move, and at the time when NEO was selling down to this price point on the day, the blue line was right there. So essentially, we were falling down into intraday trending support. So at that time, the risk would be extremely elevated to be selling it or betting it bearishly, and the risk is the probability of winning essentially would be higher if we would have traded long there. So instead of being sellers or bearish, we decided to be long bias because essentially the risk is more favorable to the long side at that time during the day. So that was the trade on NEO. And the last one is EQOS. Didn't trade this like amazing. I really didn't understand the move fully today. So I went smaller size on it, and then it ended up just getting annihilated. So if I could type correctly, EQOS. There we go. So essentially, first short was like a 200 share short here, dropped out, we covered the move, and then the next short was like up here, pulled back to here, covered the move, and then stopped paying attention to it, and then it just got annihilated. So I've essentially shorted 2 pullbacks, covered into the pullback before it squeezed, and then never shorted the top pullback that ended up just getting annihilated. Probably because I was focusing on another stock at the time rather than watching EQOS. And those, ladies and gentlemen, were all the trades. So we traded 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 tickers. So we traded 12 tickers today. And if we do a little calculation, so we traded 12 and we're red on 2. So that is an 83% accuracy on the trading day. Phenomenal. Can't complain. So that is all we have for you on this trading recap. But again, like I said, going forward, I'm going to take my live trading days and then just essentially edit them so that you guys are seeing maybe 1 or 2 trades. So the video is only maybe 5 to 10 minutes long and you guys can learn from that. And if you guys would like to join into our trading room, it's very affordable. It's $30 a month. There's going to be links in the description that you can follow and join into our program. We trade live every single day, 8 a.m. until 11, which we might be extending here soon. But we also do have a sale coming up during Christmas. So if you guys are really gung-ho on getting a discount, just wait until Christmas and then we'll have some sales you guys can take advantage of. So with that being said, everybody take care, have a great day, and we'll see you guys on the next one.